Yeah, so our next speaker, Mr. David Schroepfer, will be giving us an update on accounting for digital assets, which is a quite interesting topic if you heard anything about the news with MicroStrategy and impairment. So I will let David take it away here in just a moment.
Right, good morning, everybody. Got a crowd here that is just ready to talk accounting for crypto. I can see this. You guys are fired up. Or you had too much to drink last night, one of the two. I don't know. Well, why don't we go ahead and get started? My name is Dave Schroepfer. I'm a financial services partner with wipfli CPAs and consultants. We're a national CPA and consulting firm, and our sweet spot is just what you guys are here for, is digital assets. So I'm not going to go through a lengthy, in the interest of time, intro here, but let's talk about our agenda in the next 29 minutes and 55 seconds here. So want to spend a few minutes on the current state of affairs in accounting for digital assets, where we've come on the accounting for crypto. I think it's useful to go back and take a look and see what the journey has been so far. What's happening now, a lot of things going on, and where we are going in terms of accounting for crypto assets. So with that, what are the current accounting rules for cryptocurrency? And we're talking about rules. These are authoritative guidance on how we account for crypto. So the answer is there currently exists no authoritative guidance. So accordingly, you guys are all my superheroes. You guys who have crypto on your balance sheets and you have to figure out how to do the accounting. I put Flash up here because you are superheroes, because right now you're as you know, you're in a world with no rules. I guess I once heard if you don't have rules, you can't be wrong. Isn't that the way it works? Somehow the SEC doesn't see it that way, though. I don't know what that's all about. So anyway, accounting rules for cryptocurrency. So this is like your test this morning here. Which of these actually create authoritative guidance for financial reporting? So the wrong answer on a couple of these is they can provide guidance, but the real rule makers are really what you're about to say is, if you're in the international world, let me go back. If you're in the international world, IFRS, International Financial Reporting, or Financial Accounting Standards Board, number 2 up there, they create the authoritative guidance. You know, I say authoritative guidance. This is the rules that we have to live by, for which, like I say, we don't have anything right now. So AICPA, and we'll get into this in a second, the AICPA and the SEC have taken stances, put some stuff out there, what they feel is the correct answer, but again, nothing that is a definitive rule at this point. So we're really looking for IFRS and Financial Accounting Standards Board to set the rules. So where have we been? So think back, for those of you who've been in this business for a while, like I have. 2015, Bitcoin was trading at $300. What is it? Who cares, right? At that point, we thought, well, maybe it's cash, maybe it's foreign currency, could be inventory, could be subject to securities accounting. We don't know what it is at that point. So one of the things that happened is, starting in about 2015, 2016, is we had everybody taking a stance. So everything you see up there has probably been tried at least once by folks who have cryptocurrency on their balance sheet. So fast forward a little bit. The accounting rules for cryptocurrency, again, we look back to 2019. I headed a study for the U.S. Chamber of Digital Commerce. Very simple, just asking a whole lot of members and non-member companies for the chamber how they accounted for their digital assets in cryptocurrencies. So that study was concluded in mid-2019. Great participation, but what it told us was this. We had a lot of folks accounting for cryptocurrencies as investment securities. We had quite a few doing inventory. And then a small amount accounting for cryptocurrency as intangible assets. We'll get into talking about what that means really, but I think the takeaway on the study was, again, a huge amount of diversity in how this was accounted for. So this study is available online if you want to look at, if you're a member of the Chamber of Digital Commerce. I think it's still out on their website anyway. So what we saw, the best practices, and again, looking at companies that are non-public companies. So the best practices appeared to be at that point inventory, if you're, again, broker-dealer, reselling crypto, investments marked to fair market value, investments at cost, and intangible assets. All right, so moving ahead on the timeline, along comes also mid-2019, the International Financial Reporting Group issued a staff interpretation. So the staff at IFRS made their first attempt at hopefully establishing a definitive set of rules for accounting for cryptocurrency, on or around mid-2019. Long or short of it, the board did not embrace the idea and did not move ahead with standard setting on the international guidance, but the IFRS staff did issue a staff interpretation bulletin, which again was simply their read on what the cryptocurrency accounting should look like. So the conclusion that they presented to the board on the agenda decision, committee recommendation on accounting for crypto, if holdings meet the definition of inventory, this is 2019. If it meet the definition of inventory, you account for it as inventory. Otherwise, you apply IAS 2, which is, again, the International Accounting Standards version of intangible asset accounting, inventory accounting, and the lower of cost or realizable value. If cryptocurrency does not meet the definition of inventory, we apply IAS 38, which is the intangible asset standard. So that's where the staff at IFRS left off in terms of their take, which then led to the end of 2019, where the AICPA issued a practice bulletin. And what the practice bulletin did, it reiterated some of the things that we learned over the first several years of how to put this on our balance sheets, and that was crypto cannot be cash, it can't be securities, and it can't be inventory. This is, again, just the informal, non-authoritative guidance of the American Institute of CPA task force. So, again, the conclusion is it can't be cash, it can't be securities, it can't be inventory, so it must be, what are we left with, right? An intangible asset. This basically, following late 2019, though, again, not authoritative guidance, not an actual, per se, accounting rule, this practice bulletin, along with IFRS staff interpretation, sort of became a version of GAAP at that point. So cost basis subject to impairment. So that's basically where we left off on both of those is, and the only difference between the IFRS standard was the fact that we had the ability to account for it as inventory. So subsequent developments. So IFRS continued to issue more interpretation, continue to apply IAS 2 inventory where appropriate. Again, so thinking about in terms of a broker-dealer, if you meet the requirements, it looks and smells like inventory, we can account for it as inventory with lower cost to market. Continue to apply the intangible asset accounting, But what developed then from the original staff interpretation in 2019 was the fact that, let me go back here, was the fact that we could now, under the IFRS standards, or International Accounting Standards, we could apply some fair value accounting. We'll go into some examples of this in a second, so bear with me. I'm going to rumble through some of this. I know you guys are waiting for all the numbers on this. So the accounting rules, so basically for U.S. public companies, what emerged over the last several years is generally applying the intangible asset accounting. So again, the SEC has embraced that methodology, again, though it's not anywhere in terms of a policy per se, that's a definitive interpretation of GAAP. So I like, this was I found this comparison, this, I apologize if this is an eye test for you, but so one of the things, just comparing then where we are today under the IFRS International Accounting Standards and US GAAP. So pretty much where we are, measurement, historical cost. So in other words, we buy, or in the case of mining, we put crypto on the balance sheet at the original basis. Once on the balance sheet, then we've got no amortization. It's an intangible asset if we're applying the intangible asset standards. Impairment, if the value goes down from the original value that it goes on the balance sheet at, we are recording that as a charged earnings or an expense, if you want to call it that. Moving down, so the interesting twist on this is, again, as I alluded to before, reversal of impairment. So what happens then if we apply the US standards in terms of intangible asset accounting? If our crypto that you got on the balance sheet goes down in value, we record an impairment. If it goes back up, we do not do anything at all. So it stays at that impaired value. If it goes down further, we further impair that. Now, we've got a little variation between the international accounting standards, and I'm not sure how many of you have experience or report under the international standards, but just for those of you keeping score at home here, basically what happens is under the international standards, if the value goes back up, which is what's going to happen on marketable crypto, right? We're going to record an increase in the value of that crypto. And to the extent that it exceeds the original cost basis, we're actually going to record an increase first to earnings until it gets back to the original basis that we put it on the balance sheet at. But then following that, we're going to record that increase to the fair market value under the IFRS rules and show the increase to equity. Again, different from what we have in terms of the US accounting standards. Don't worry, we'll go through an example of this. Now, recognizing there are some differences, there are some carve-outs in US GAAP. Investment funds. Investment funds still are embracing a fair value model. So generally applying fair value model of accounting. That is, if you've got marketable cryptocurrency in an investment fund, we record that at fair market value. When it goes up, we record it up. When it goes down, we record the impairment. Different from, again, applying the intangible asset standards. All right, so non-public companies, I want to emphasize the fact, non-public companies still are applying these three methodologies. So remember our survey that we did back in 2019 with the Chamber of Digital Commerce. The securities accounting, inventory accounting, and intangible asset accounting is still being applied out there, and some of you maybe have that experience in your entities, but we are still accounting for cryptocurrency utilizing securities and inventory accounting. Again, we'll go through an example of that in a second, in addition to the intangible asset account. Public companies, again, I emphasize the fact the SEC is looking for intangible asset accounting, meaning that I record it at cost basis, impair it, but don't write it back up to fair market value later. So, what is the securities accounting? I touched on that a little bit earlier. So basically, it's a fair value model. If I use the term securities accounting, basically similar to I record maybe debt securities on my balance sheet. But change in fair market value is recorded to either equity or earnings. But again, the balance of crypto on your balance sheet is still recorded at the fair market value. That makes sense. That's logical, isn't it? You know, if you got it's different if we have non-marketable crypto sitting on your balance sheet. That's a different story. But if we have something that's marketable, I can sell today. It makes sense somehow to record that at fair value. That's just my opinion. Okay, so here's an example, which you've all been waiting for. So this is an example of how securities accounting works in terms of accounting for cryptocurrency. And I'm going to rumble through this in a hurry, and if you got questions, you know, we'll see if we have time left. So in my example, we acquire $100,000 of Bitcoin on January 1st. The value goes down $10,000 on January 2nd. January 3rd, it goes down another $20,000. It goes up in value on the next day by $15,000 and goes up another $25,000 on day 4. So under securities accounting, we're going to record this, and you can see the next table down below, at whatever the fair value was. Again, it makes sense, right? Whatever the fair value is. Down on the bottom, in this methodology of securities accounting, recording the impact to earnings, or equity, I mean, we're recording the other half of that fair value adjustment to equity. So this is GAAP when you have, again, debt securities, and it's applying that same concept, which companies are, non-public companies are, some are using this. So then we've got intangible asset accounting that I've been referring to. So this is what is currently being applied in public companies and a number of non-public companies. So again, just as a review, record the acquisition of the asset at cost. If the fair value increases, no accounting for that. If fair value decreases, we're going to record an impairment right down to fair value to earnings, and this becomes our new basis going forward. So here's our example. Same costs, or excuse me, same fair value structure. So the difference is, when we look at and compare this to what we saw back on the securities accounting, balance sheet reported value of the Bitcoin, essentially we wrote it down on day 1, day 2, but then as the value came back up, we're not writing that back up. So you see the impact to earnings, we have a $10,000, $20,000 impairment to earnings, but then as the value came back up, we're not recognizing that. We'll come back to that. So what happened in 2021 that was probably, we hope is going to be impactful, is the Financial Accounting Standards Board did what they call an agenda request. And basically what that means, maybe some of you have participated in this, is simply an ask out to the public, you know, what should be our agenda in terms of standard setting going forward. So what were they requesting? They're requesting input on what those standards, what the priority and what they should be setting standards on. So this was the ask. And so what did they receive in terms of feedback? Again, sorry for the eye test here, but I can tell you the top line, and you can access this, I think, in your materials. The top line, huge difference in terms of how much feedback they received for standard setting on digital assets. By and large, the most significant, and I'm going to show you the next slide, that basically goes through and says, as far as the feedback we received, the majority of the respondents, let me go to the next slide, might be easier, of over 500 responses on that agenda request, 445 respondents solely commented on digital assets only. So again, another one of my projects was conducting a little bit of a grassroots effort to make sure that participants and market participants understood that this was a chance for them to exercise their input in terms of the financial accounting standard setting. So that's actually a huge response. Over 500 responses and 445 of them being requests to set standards for digital assets. So a pretty resounding statement, I'd say, to the Financial Accounting Standards Board. So why and there's not a slide for this, but why did it take till now for this to happen? Basically, until now, the Accounting Standards Board really didn't have an opinion that this was a impactful enough topic to set accounting standards on. I think the fact that we now have a multi-trillion-dollar market cap might be getting their attention, along with the fact that we had over 400 some responses. Of those responses, a great deal of them advocated a fair value method of accounting for crypto. So I can tell you, and there was no statistic on this, but I'm relatively certain of the 445 respondents that urged the Accounting Standards Board to consider digital assets in terms of their next standard setting. A great many of them were advocating the fair value method. So again, different from, and let's take a look at an example of how that differs, keeping in mind where we were at with the intangible asset standard. So back to the same example we had before. You see a decline day 1, day 2 in Bitcoin. Day 3, the value goes up. And remember back on our intangible asset model that's currently being applied for public companies and a lot of non-public companies. Day 3 and day 4, when the value of our Bitcoin went up, we didn't do anything. We just left it at that impaired dollar amount. The fair value model, again, simply put, adjusts the value of our cryptocurrency to the fair market value. So one of the things, again, the FASB agenda project showed us is that there seems to be a significant demand for this type of accounting approach in terms of making the financial statements more meaningful to the market participants. So where is FASB at today? So following the 2021 agenda setting request, at or around the end of the year, the numbers that you just saw came to the board. Currently, the action that's been taken is what's called a research project. So what that means is, in the terms of the Financial Accounting Standards Board, research project is simply that they are looking at, again, kind of getting up to speed. The staff is getting up to speed on what the implications and understanding further what some of the market variables are. So timing on that. Right now, it's estimated that we may see action taken at the board level on the research project somewhere around mid-2022. Now, what could that action be? It's basically one of a few things. One, they could recommend that the board put on their list of priorities, their shopping list, to set standards for cryptocurrency. And it could be a high priority, could be a lower priority, but they could, as a result of reviewing the research project, recommend, again, for standard setting. 2, the other action they could take, again, kind of varying off of that, it could be a low priority, it could be a higher priority. 3, they could do nothing at all. I don't know that I'd want to venture a bet on this, but I would say, considering the response that the agenda request received from maybe some of you and our friends around the industry, it seems likely that there's some action to be taken on this. is my thought, as opposed to no action at all. So where does that leave us then, as far as where we're at today? There is a great deal of diversity in the rules being applied right now. And as I've illustrated earlier, we saw securities accounting being applied. We have seen inventory accounting, intangible asset accounting, and there's probably a few variations out there too beyond that. So to a certain extent, where we eventually end up, I guess, might entail some amount of flexibility in terms of that there maybe isn't one right answer. That's a possibility that could come out of the standard setting process, is that for different circumstances, there might be different accounting methodologies. In discussions I've had with different user groups and stakeholders in the crypto industry, that's actually a pretty favorable outcome, because we recognize that each of us in this room, in terms of our business balance sheets, may have different uses and different applications in terms of those digital assets that are on your balance sheet. So that is some diversity in the eventual authoritative guidance might be a favorable outcome. Not necessarily all the correct information is in the financial statements today. It's kind of one of the outputs from the respondents on the agenda setting process. The feedback has been from that the usefulness of the information, if you're applying, as example, the intangible asset standard, that example we saw where we're impairing the dollar amount of your crypto, but we're not writing it back up to market value, the usefulness of that information in terms of the financial reporting, in the opinion of a lot of the stakeholders, is that that usefulness is limited because it's not at fair market value. Seems to me the stakeholders are asking, based upon that output, they're asking for fair value methodology, which again, I'm sure to a lot of us that's intuitive. So getting good authoritative guidance is needed for, again, consistency, correct information to the stakeholders of the financial statements, getting good authoritative guidance. I can tell you still the fact that the process is now starting, at least in the Accounting Standards Board, the process needs some advocating from, again, the user groups and really all of us. So I think as they move forward, I think for those of us who have the ability to provide feedback to the Accounting Standards Board, that's certainly very advisable, because they need to, again, understand the pervasive impact that that standard setting is going to have in terms of a fairly large market cap out there.
What's the name of your company?
wipfli. Yeah, so we've got a booth here. So if anybody has any questions that I'm sorry I wasn't able to get to, stop by. Be able to hopefully have a chat with you on this. As you can tell, this is exciting stuff. So a lot of things happening. Hard to squeeze that into a half hour, but you know what? Let's talk some more. So thank you. You guys have been great.